Well, the stock market is up. So guess what story is back? Quote, there is a new record of 401k millionaires. Perhaps you fall into that category out there. And if so, congratulations. But here's the thing. Now what do you do? What are you going to do about it? Do you keep putting money into the market, or do you take a profit and put it into a less volatile place in the stock market? Nolan, if people are coming in and they have these questions for you, should I keep writing this and making the most of it, or should I go ahead and take some of that off the table? What are you telling them?
Well, here at America's Retirement Headquarters, what we really try to focus on is those folks that are in what I refer to as the retirement red zone. So folks that are 5 years before retirement or, have retired within the last 5 years. I think, when you look at the current market conditions, that's where it becomes much more relevant for families. And the reason being is when you move from savings and accumulation. So my son, who worked here at the company, he's 21, and he's been putting money into the 401k. And whether the market goes up or down in the next year really has almost no impact on him. And if you look at the sequence of returns of when the market goes up or down, for somebody who's a saver, it really doesn't have a big impact. But when you get close to retirement time, major losses right before retirement can derail your retirement plan, as well as the fact it's even worse when you've made that decision to retire and now you're taking money out of your retirement plan. And if that money, is in a volatile spot with the stock market at record highs and the market has some type of major sell-off, that sequence of return, those big losses right away can kind of hurt you. What I'm telling people to do right now is what I would tell my kids when they were little and I go back into, elementary school or even scouts, and that's to run the fire safety drill with your portfolio. I am so happy to see that the markets are up substantially here in July of 2024 this year, and I hope the markets continue to go up. I do believe that the market risk is somewhat elevated. We have a lot of things that are going on right now. You've got a former president who was almost assassinated recently. We've got the election coming up behind that. You've got markets at record high. You've got geopolitical uncertainty overseas. You've got, underlying recession fears. Inflation's the real deal. There's a lot of turmoil that's building up. So for those folks that are getting closer to need that money, taking some steps to kind of protect their pockets and their profits is probably a good idea. Determining whether your portfolio is too risky at any given point involves considering, again, multiple different factors. So in the example that I gave a minute ago, my son at 21 is very different from somebody who's at, say, 60 or 65.
Sure.
When we look at it from a financial perspective, when we're making decisions as we look at things on our investment committee meetings that we do every month, we're looking at things like the economic indicators, we're looking at market volatility, we're looking at those geopolitical events, and we're, then evaluating somebody's individual risk tolerances. One of the things that we do for all of our clients is we develop what's called an investment policy statement. And within that investment policy statement, what it'll do is it'll help us determine, within a 6-month time frame, what the likely outcomes could be in the portfolio if the market continues to perform well and or if the market has normal market pullbacks. That coming up with that helps somebody determine what their overall risk score is. And we can measure risk in this case anywhere from 0 would be like having your money in the bank to 100, meaning investing in something ultra high risk. And so we can then go through a series of questions with somebody and we can ask them, well, how do you feel if this happens? Or what does it look like if this is the outcome? Would you pick this investment or that investment? It's kind of like going to the eye doctor. And the goal is to get, 20/20 crystal clarity on what the vision looks like within the portfolio. And by going through that independent portfolio analysis, what it allows us to do is it allows us to say, does your portfolio line up with who you are and what you're comfortable with? So if you're invested into the stock market, whether you have a 401k or you're a personal investor and you have more than $250,000 of investment assets, we would be happy to do an independent portfolio analysis for you, give you our feedback on where we would see, maybe some strength in the portfolio, if there is any areas, maybe areas for improvements. We'd be happy to share, again, more information about what we think about with the market being risky right now. Again, we'll talk a little bit about interest rates. It's my opinion that interest rates are probably going to stay Higher for longer, I would agree with that term. But overall, I do feel that interest rates are probably going to go down at some point in the future. So
Hmm.
locking in decade level high interest rates and some of the products that are out there, could make a lot of sense. Inflation, factoring that into your portfolio, I think inflation is going to be here for a long time. I would expect between now, middle of the year, and end of the year, I would not be surprised if we saw some significant increase in market volatility. That being the VIX index is called the fear index, and volatility creates uncertainty, which sometimes can create panic for people. And if you panic in a situation, those are the type of investors that typically get hurt. But if you've run this fire safety drill and you know what the plan is, volatility actually can create opportunity. They say that the past never repeats itself, but I also say that history oftentimes rhymes. And so when we look at it, I would say with the markets at record level highs, I mean, again, depending upon what index that you look at, for the most part, a good majority of the indexes are at record level highs, driven by a small group of individual stocks that are pushing that index higher. You've got to be a little bit careful with what you own. There are some investments that I would consider to be risky right now. I do have concerns about some of the geopolitical risks that we have, with the global conflicts that we have, even in Russia, Ukraine. How the elections could impact the different trade policies. I think whoever is the ultimate winner of the election, I think is going to have a very clear difference in what their trade policies are based upon the U.S. Or international. You want to pay careful attention to, what the corporate profits are of companies. One of the stats that I talked about is a little over 40% of the companies right now in the Russell 2000, which are small companies, are unprofitable. Generally, I think, I get concerned about companies that are unprofitable in this type of environment and how those are going to perform, when we do have a recession or we do have a pullback in the market. So owning quality companies, knowing what you own, and then you take that and you apply it to your individual risk tolerance. So, just because you're golfing with some friends or you're playing poker or get some advice from, some friends in your social group, what's right for their situation may be different from yours. And so figuring out what's right for you, again, comes down to talking about your goals and objectives, looking again at having that independent portfolio analysis so you can evaluate what your risk tolerance is, applying that to how your investment horizon is, understanding if there are things that you want to do to have some downside risk management. What are the steps that you can take to still try to participate if the market goes up, and maybe limit losses when the market goes down? We have a lot of those topics on our YouTube channel. So anybody who goes to YouTube, just type in America's Retirement Headquarters. You can see different topics that we give you specific advice on, ideas to implement for downside market protection. But in conclusion, the best thing that you can do, again, is if you have more than $250,000 of investment assets and you have that money in a 401k or an investment account, give our office a call. We'd be happy to provide you a complimentary investment portfolio analysis, give you feedback to help you address that question, help you run that fire safety drill before the economy catches on fire.
That's right, and better understand your volatility, what you're comfortable with as far as your risk tolerance goes. It's probably going to be not going to be zero. It's not going to be 100. There's obviously 99 different variants in there, but finding out what's going to work best for you. The growth potential in the market can't be understated, but also knowing that, if we saw a 10, 15% pullback and you're heavily invested, it could be detrimental, could possibly be devastating to your retirement. So you got to find that Goldilocks approach, what's going to work just right for you. That is where that independent portfolio analysis comes into play. That starts with a phone call, 419-794-3030. Schedule a time to speak with the guys at America's Retirement Headquarters, or go to the website and you can schedule a time, find out more about them there as well, arhq.com.